Hi, this is Jack from Alpha Charts, and today is April 12th, 2020. Happy Easter and Passover with a state of the market update. All right, so before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so today we're going to start with just the moving averages on the SPX, okay? And so I'd like to look at this just to say, okay, well, what is the trend, right? If we're trend followers, then we need to know what the trend is. And I think the moving averages help smooth out a lot of the confusion in the markets. And the way I look at this is the trend right now, to me, as of today, looks like it's still lower. I know that we have this, little upturn over here on the shortest term moving averages, the 23-day EMA, but the longer term trend is still lower. Now, if these start to flatten out, I will change my my mind on that. But as of right now, they are not, and so as of right now, I still think that the trend is going to be lower. Adding price back in here, I think that we're coming up into supply in this area right here, and I think that this is a pretty clear ABC move going on there. So really, in the end, there's three possibilities here, right? So the first possibility is that we maybe chop around here and then we continue higher. The second possibility, and the one that I think is probably the most likely, is going to be where are you at here? There we go. Something like this, right? So something like this. I don't know exactly how it'll look, but we're gonna back and fill here. We don't have to come all the way down to here. Maybe it comes up here. Maybe it goes lower to here. Maybe it goes all the way down to here, right? And it takes a longer period of time, something like that. But that is probably the most likely scenario. And then let's get rid of that. And then the third alternative is that this was a bigger ABC move, and we're coming into, I don't know, around 1700 or so. And that would be I think the worst case scenario, or the continued lower. So those are my three scenarios. And so for me, if we get above this area, we'll have a place now to manage risk against. That's great. If we start turning down, I'm looking maybe in this area, depending on price action. And if we continue underneath here, then I have a place over here to manage risk against. So that's kind of how I'm approaching this market. As of right now, I am still mostly cash. Again, this could be a bigger head and shoulders top, right? And if this turns over, then we really have to look at, these areas and potential for the bigger move down. So we have to be on guard for that, if nothing else. The Qs look the best. Again, we're back in this major long-term channel, which I think is a huge positive. We had a little bit of a false breakdown out of it, came right back up. The moving averages are moving, at least these are flattening out. Again, this looks so much better than any of the other markets. So if we are going to stay above these moving averages, I think that the Qs is the place we want to be in. IWM looks the worst. This could be, again, another ABC move, just like most of the other ones look. And zooming out, this is the next big level, this 86-ish level, right? I mean, it's the big level. It's the one that if we move back down, we could undercut this, come to this level or someplace close to it. Doesn't exactly have to hit it, and then move higher. That's the scenario that I'm looking for. We get above 127, we'll have a place to manage risk against. And in here, it's just chop, and it's hard to find an edge, at least for me, in this area. So if we get extreme down here or above here, now I can manage risk against it. Dow Jones Composite, looks very similar to the other one, someplace between the SPX and the Qs. XLF, had a big gap up. I mean, beautiful. So what I'm worried about here is a potential another gap up and then a fade down. I think that would be the most bearish scenario possible. But there are gaps to be filled, whether we do it now or if we have to fill these lower gaps first. I don't know. I mean, we'll see. And then not all gaps have to be filled, in my opinion. Semiconductors look like the best of the bunch. The 100 level is my key level, above 100, and we are, I think it's a bullish scenario. That was the 2000 highs. I am watching, and this came up on my radar today, potential shoulder, head. If we turn back over, this 81-ish area is going to be a key support level, right? So 100 is important. If we break 100, 81, super important. We break 81 and things are going to be really bad, like terrible. So I'm hoping we don't, obviously, but I don't get to control that. Again, I'm just looking for the potential of a rollover here. But if you look at it, nice moving averages flattening out. That's on the weekly too. Look at it on the daily. Price is still below them. It's moving up. Again, some choppy action here. Looking for the 100 level to hold. But again, here's my worst. Here's a bad case scenario, right? This would be really bad. And then worst case would be if we break this. Looking at lumber, not much of a signal again here, coming up into the supply area. So again, maybe a little upside is left, maybe, but what happens up here will be what interests me. So we're not quite there yet. So I'm watching for that. Value line geometric index. We're right there at supply, right? We're right there at the supply. Change that to a line chart to make it easier to see. Right there, we'll see what happens. Again, this is what the median stock is doing. So I like to use this for breadth, right? And obviously we had a nice big breadth thrust right here. That's a beautiful looking move. Let's see if it can be sustained. Again, chopping here would be constructive. Roll over here would be less constructive. We'll see. Put call ratio. I mean, just no fear in this market. So I think that everyone looks like a lot got bullish again, right? We're hovering around 0.9. That's almost on the bullish side of things, right? I mean, not terribly, but it's there. It's definitely not fearful. So no one's fearing this market right now. As a contrarian indicator, I think that's a problem. I think that shows maybe complacency. Right, running right in the middle, right? 1 foot in the door, 1 foot out the door. Again, that's equity only, put call ratio. No fear. That makes me a little nervous. Looking at credit spreads. Huge gap down in the credit spreads. And so I think that's constructive that the spreads are coming back in. And we'll see if that continues. I know the Fed is buying a lot of bonds and high yield and everything else, and it's affecting the markets, obviously, which is what they want to do. And I think that, but I think all in all, that's a good thing that the yields are coming back down. The spread's coming in a little bit. Gold. Gold is making multi-year highs. So that's interesting, right? Big base, multi-year base here, multi-year highs closing at. Could we come up here and get up to 173, 175-ish? Yeah, I think it's possible. Maybe even get back up to 184, 185. Sure, that's possible. I think gold looks pretty good now. I don't have a position in this yet, but I think that, if we get some more choppy action in here going sideways and then these moving averages kind of touch it, I may consider this one. All right, so I'm going to end with the consumer staples, XLY versus XLP. Okay, so this is discretionaries versus staples. And so from the 2009, you see this uptrend line, and its uptrend line was broken back in March, right? And so this is more of a context of risk appetite. So the one thing about this ratio is that it is dominated on the discretionary part, is dominated by Amazon. 23 makes up 23% of it. Home Depot is 12%, and McDonald's is 7.5%. Together, those three individual stocks make up 42.5% roughly of the consumer discretionary ETF. On the other side, on the staple side, you have Procter & Gamble 16%, Coke 10.5%, Pepsi 10.5%, and Walmart 10%. So they make up 47%. So as you can see, this really is a ratio of those two ETFs and sectors, but it's also of only really 3 stocks on one side and 4 stocks on the other side. It's I think it's important to look, and the break was important. There's no doubt. But I think looking at the equal weight versions of this ratio tells a completely different picture. And so here's the picture that it shows. And let's go to a weekly chart just so you can see the big picture. Okay, so basically here were the 09 lows, right? That's with these two right here, 09 lows. And we're coming back and we're kind of retesting this area. Going back to a daily chart now. Coming back and retesting that area from the 09 lows. So I think that if this area holds and discretionaries start to outperform, which just recently, I mean, we can say they have, but again, that's just not enough for me yet until these moving averages start to flatten out. It could be just a bear flag at this point. But on this ratio chart, if this area holds, right, I think that there's a good chance that the bottom could be in. If we start to see breakdown below this area, I think that's another reason to become more and more cautious. So that's one of the ratios I'm looking at. Again, it's the equal weight discretionaries versus staples. So if staples continue to outperform, which they have been, I think that we can look for lower prices in equities as a whole. And so again, it's more of an indicator chart, and I think that again, equal weight tells a completely different story. So going back to SPX, some of my final thoughts on this is, momentum is still lower with some mixed signals. We're coming back into support. Can this be, some type of, triangle / bear flag? That's kind of shaping up here. Ascending triangle type of thing. And we're going to roll over. I think that's a possibility. Again, a U-shaped bottom here, whether it's above or below this resistance line, I don't care so much. But again, a rollover with a U-shape here is kind of what I'm searching for. I think to me, this is, again, whether you want to call this an ascending triangle or a bear flag or whatever you want to call this, I think a breakdown here is the likely scenario. But hey, if we pop up against this level here, and these do start to flatten out, I'm going to quickly switch to a more bullish scenario, and I'm going to be measuring my risk against this area. Hope you all have a great day today. Good luck this week. Stay nimble in the market if you're actually participating. Like I said, I'm mostly cash in my accounts because I don't know what's going to happen. I just don't know if this is going to roll over or this will come up here and chop around and these will flatten out. So I'm going to watch. And then once the market gives me my clues, I will try to participate on the proper side of it. Again, good luck this week. Take care, guys and gals.